Hey everyone, welcome back. We're going to be tackling something today that I know is on a lot of people's minds right now, investing during a potential recession. And to help us break this all down, we're diving into some insights from none other than Meet Kevin, the financial YouTuber,
Oh yeah, meet Kevin.
who's not afraid to say what he thinks. And what I really appreciate about his approach is it's not just doom and gloom like everything's going to crash hide in a bunker. He
Right.
actually looks for opportunities where others might only see risk. And that's what I think is going to be so interesting to unpack together today.
Yeah, no, I think that's what's so refreshing about Meet Kevin is that, he acknowledges that recessions can be scary, right?
Mm.
But he doesn't let that paralyze you into inaction. And he really does view it as a time
Nice.
when,
Yeah,
yeah, the truly savvy investors can actually get ahead.
exactly. And some of the things he suggests might surprise you. We're talking investing in things like robotics, when everyone's worried about job losses from automation,
Mhm.
or seeing the potential upside to mortgages when interest rates are all over the place. So if you're feeling a little uncertain about your investments right now, this should give you a new perspective and hopefully a little bit more confidence.
Yeah, let's jump in. So Kit Kevin starts by talking about something. That makes this potential recession really different from previous ones, AI and robotics.
Oh, yeah. And he thinks this whole quiet layoff trend that we've been seeing, where companies are hesitant to do mass layoffs, he thinks it's almost like a ticking time bomb. He's saying that once the recession truly hits, AI and robotics could actually speed up the rate of job losses, which is a little unsettling, to be honest.
Yeah, it is a little unsettling. And I think that's kind of where his investment strategy comes in
Right.
because he sees the companies that are developing and implementing these technologies as being the big winners, even as others struggle.
So it's like he's saying, don't just watch the wave, figure out how to surf it.
Exactly.
Yeah.
Yeah. And he's really putting his money where his mouth is, too.
Yeah.
He even mentioned that he's exploring private investments in robotics companies.
Oh, wow.
Yeah.
That's a level of confidence I admire.
Yeah. He sees a lot of potential for growth there, even if the broader economy isn't doing so well.
Okay, so robotics check. Now on to something that doesn't usually get people excited about investing. Mortgages. I have to admit, when I first saw that in his video, I was like, wait, what? But Meet Kevin actually sees a potential upside there too.
Yeah, this is where his contrarian thinking really shines through. He's suggesting that mortgages, specifically prime mortgages, could actually increase in value if interest rates drop during a recession.
Okay, I need a little help wrapping my head around that one.
Sure, so imagine you have a mortgage at a fixed interest rate. Now let's say interest rates fall because of the recession. Suddenly your mortgage with its locked-in higher rate becomes more valuable. It's like having a rare baseball card. As the market changes, your asset becomes more desirable.
Okay, that makes sense financially. But I have to ask, what about the risk of people defaulting on those mortgages? If the economy is bad.
That's a great question, and Meet Kevin addresses that head on. He specifically talks about prime mortgages, meaning loans made to borrowers with good credit and a low risk of default. And he believes that regulations like Dodd-Frank, which was put in place after the 2008 housing crisis to prevent that kind of risky lending, makes today's prime mortgages a much safer bet than they were in the past.
So he's not talking about those subprime mortgages that caused all that trouble back then. He's focusing on that higher quality end of the market.
Exactly. He believes those safeguards make a big difference. And to make it even more practical, he recommends looking into companies like Rocket Mortgage and United Wholesale Mortgage because they specifically focus on that prime lending space.
So it's not just any mortgage. It's about understanding the specifics and picking the right ones. It's like instead of just buying any old house, you're looking for a house in a good neighborhood with a solid foundation.
Yeah, perfect analogy.
Okay, so mortgages, check. Now on to the big one, the stock market. Meet Kevin gets pretty real here, and he's not sugarcoating things. He's particularly wary of certain types of stocks during a recession.
Yeah, he specifically advises against putting your money into small cap stocks, especially those with a high percentage of unprofitable companies, because they often lack the resources to survive a prolonged downturn.
It's like trying to navigate a hurricane in a tiny little boat.
Exactly, a much riskier proposition.
So what does he suggest doing with your money instead, especially if you're still feeling nervous about the stock market in general?
Well, he suggests something that a lot of people might overlook: high-quality corporate bonds.
Okay, so what exactly are corporate bonds, and why are they a good option during a recession?
So imagine you're lending money to a big reliable company, like a Coca-Cola or a Microsoft. They need money for something, and in return, they promise to pay you back with interest. That's basically what a corporate bond is.
Mhm.
And during a recession, when everyone's a little scared, you might be able to snag these bonds at a discount.
So it's like buying those blue chip companies on sale.
Exactly. And Meet Kevin even suggests approaching banks like JP Morgan to access high-yield bond options.
Wow, so it's like having a VIP pass to the best deals.
Exactly. It's a way to stay in the game without taking on as much risk as you might with individual stocks.
I'm starting to see a pattern here. It's all about being strategic and understanding those different levels of risk and opportunity.
Exactly. You don't have to sit on the sidelines during a recession, but you do have to be smart about where you put your money.
All right, next up is something that honestly I've always thought was a bit boring. Cash. I mean, isn't it better to have your money out there working for you? But me, Kevin, seems to think cash is king, especially right now.
He does, and he's not alone. You know, a lot of legendary investors like Warren Buffett emphasize the importance of having cash on hand. It gives you that flexibility to act when everyone else is panicking. Think of it this way. When the stock market is going crazy and everyone's selling, you can swoop in with your cash and buy those bargains.
So it's like having ammo ready. When that perfect target appears,
Precisely. And Meet Kevin suggests putting your cash into short-term treasuries. They're considered extremely safe, and right now, they're offering some pretty attractive interest rates.
so you're essentially earning a decent return while you wait for those prime buying opportunities to come along.
It's all about being patient and disciplined. Don't let fear drive your decisions. Have a plan and be ready to strike when the time is right.
I'm already starting to feel a lot less anxious about this whole recession thing.
Good. That's the goal. Knowledge is power, and understanding your options is the first step to feeling confident about your financial future.
Okay, we've covered robotics, mortgages, bonds, and the power of cash. Up next, we'll tackle some other asset classes like gold and crypto. Stay tuned.
Welcome back. Hopefully, feeling a bit more prepared to kind of navigate this potential recession.
Yeah, it's not all doom and gloom, and that's what I like about his approach. It's like be informed, find the opportunities.
Yeah, be proactive.
Even when things are uncertain.
All right, so let's talk about an asset class that's been traditionally seen as a safe haven during uncertain times. Gold. I know a lot of people just swear by gold, but Meet Kevin seems to be approaching it with a little more caution these days.
Yeah, I was a little surprised by that too. I always thought gold was just like the go-to when things got shaky. So why isn't he as bullish on gold right now?
Well, he's concerned that gold might be a bit overpriced at the moment. Even safe havens can become overvalued,
Mhm.
especially when everyone rushes towards them.
So it's not that he thinks gold is a bad investment altogether. It's more about like timing
Yeah,
and recognizing that the price might not be as attractive as it has been in the past.
exactly.
Okay.
Don't buy gold, but just be cautious and do your research before jumping in.
That's good advice for any investment, really. Now, along those same lines, he also seems a bit hesitant about industrial metals like copper.
Yeah, he's got a pretty simple reason for that one. He figures that if a recession hits, industrial production will likely slow down, leading to less demand for raw materials like copper.
Makes sense if factories aren't churning out as many products, they don't need as much copper.
Supply and demand.
Okay, so maybe hold off on that copper mine investment for now.
Probably a good idea. Now let's address the elephant in the room, the asset class everyone's talking about. Crypto.
Yeah, crypto's been through some wild swings lately, and it seems like a lot of people are hoping it'll hold its value if things get rough.
So Meet Kevin isn't quite as optimistic about crypto as a hedge against a recession.
Hold on, why not? I thought crypto was supposed to be like decentralized and immune to the whims of traditional markets.
Well, it's a common misconception.
Hmm.
Meet Kevin points out that crypto is still very much influenced by market sentiment and speculation. And when the economy takes a hit and people get scared, that fear often spills over into the crypto market as well.
So those folks hoping to escape the storm by jumping into the metaverse might find themselves facing just as much turbulence there.
That's what Meet Kevin seems to be suggesting. It's a good reminder that crypto, while it can offer incredible opportunities for growth, is still a relatively new and volatile asset class.
Definitely not something to go all in on, especially if you're looking for stability during uncertain times.
Now, speaking of stability, let's revisit one of Meet Kevin's key strategies that we touched on earlier. The power of cash.
I'll be honest, I used to think holding cash was a bit, well, boring. Isn't it better to have your money actively invested?
It's about being strategic and having options. Think of it this way. While everyone else is panicking and selling off their assets during a recession, you're sitting there calmly with your cash reserves, ready to swoop in and buy those bargains.
It's like being that patient shopper who waits for the biggest sales to get the best deals.
Exactly. And remember, with those high interest rates on short-term treasuries right now, your cash isn't just sitting there doing nothing. It's actually earning a decent return while you wait for those prime buying opportunities.
Okay, so we've covered a lot of different asset classes: robotics, mortgages, bonds, cash, gold, even crypto. It's a lot to digest, but I'm starting to see how it all fits together.
The key takeaway is that there's no one-size-fits-all approach. It's about understanding your own risk tolerance, your financial goals, and the unique dynamics of each investment.
It's about doing your research, being patient, and making informed decisions, rather than letting fear dictate your actions.
Absolutely. Now, there's one more piece of Meet Kevin's strategy that we need to explore. Investing in yourself.
Now, that's something I can definitely get behind. It's about empowering yourself and taking control of your future.
Precisely. Meet Kevin emphasizes the importance of developing skills and pursuing side hustles that are resilient to AI and automation. Think trades like electrical work, plumbing, HVAC.
Those are the jobs that'll always be needed, no matter how much technology advances.
Exactly. He even suggests using platforms like Yelp and Upwork to advertise your services and build your own client base.
It's like creating your own safety net, independent of the ups and downs of the traditional job market.
And he also strongly encourages everyone to view education as a hedge against potential job displacement. It's all about constantly upskilling and learning new things to stay ahead of the curve.
I love that he puts so much emphasis on personal growth and development. It's not just about surviving a recession, it's about thriving in a world that's constantly changing.
Now, before we wrap up this part of the deep dive, let's talk about something Meet Kevin calls momentum plays. It's a bit more of an advanced strategy, but I think it's worth understanding.
Momentum plays. Okay, you've piqued my curiosity. What are those all about?
So imagine a company's stock is like a roller coaster going uphill. Everyone thinks it'll keep climbing, but you think it's about to plummet. That's a momentum play, betting on the downturn.
So it's like the opposite of buying low and selling high. You're selling high and hoping to buy back lower.
You got it. It can involve techniques like short selling or buying puts, which are basically bets that a stock price will go down.
That sounds pretty risky. Isn't that what happened with like GameStop, where a lot of people lost money when the price suddenly went up instead of down?
That's a great point. It can be risky. And that's why Meet Kevin stresses that it's not for everyone, especially those new to investing.
So it's not just about hoping a stock goes down. There's a lot of research and analysis involved, and you have to be comfortable with potentially losing money.
Exactly.
Yeah.
You need to understand the company, the market conditions, and have a solid strategy for managing your risk.
Okay, I'm starting to see why he labels this one as a more advanced strategy. Not for the faint of heart.
Absolutely.
And it requires a deeper level of knowledge and experience.
And remember, market timing is incredibly difficult, even for seasoned professionals.
So for someone like me who's still learning the ropes, what's the main takeaway about momentum plays?
I think the takeaway is that while they can be tempting, they're generally not suitable for those who are risk-averse or new to investing. There are other ways to position yourself for potential opportunities during a recession without taking on such high levels of risk.
That makes sense. Stick to what you understand and what aligns with your risk tolerance.
Now, there's one last thing Meet Kevin mentions that I think is worth highlighting: the importance of investing in yourself.
I love that he brings that up. It's such a crucial aspect of building a secure future, regardless of what's happening in the economy.
He emphasizes developing skills and pursuing side hustles that are resilient to AI and automation. Think trades like electrical work, plumbing, or HVAC.
Those are definitely fields where human expertise will always be needed.
Exactly.
It's about recognizing that the job market is evolving rapidly, and those who are willing to learn and adapt will be the ones who thrive.
You're exactly right. It's about recognizing that your most valuable asset is your ability to learn, grow, and create value in a changing world.
Okay, I think we've covered an incredible amount of ground here, from robotics to mortgages to the power of cash and the importance of investing in yourself. I mean, Kevin has really given us a lot to think about.
It's been an insightful journey, and I hope our listeners are feeling more informed and empowered to navigate whatever economic challenges lie ahead.
Before we wrap up this deep dive, I'd love to explore some of the broader implications of what we've learned today. Meet Kevin's analysis has really gotten me thinking about the bigger picture. Stay with us. Okay, we're back for the final part of our deep dive into recession-proof investing with Meet Kevin. And, this whole conversation has really kind of like shifted my perspective. It's not just about like picking stocks and bonds and like hoping for the best. It's about understanding these bigger forces that are reshaping the world. The economic shifts, the technological advancements, and like figuring out how to navigate them.
Yeah, it's about being proactive, not reactive. I think that's really what Kevin is trying to encourage us to do, is like to think critically about the future and make choices that are aligned with,
Mm.
you know, where the world is heading.
And one of the biggest trends that he highlights, the one that really got me thinking, is the rise of AI and robotics. And he's not sugarcoating it. He says these technologies are going to have a massive impact on the job market. And some jobs are inevitably going to disappear.
Yeah, and that's scary to think about. But you know what? He doesn't see it as purely negative.
Mm.
He actually sees it as this potential catalyst for innovation and growth.
Like he's saying, look, change is coming. Let's figure out how to ride that wave instead of getting crushed by it.
Exactly.
And one way to do that, he suggests, is by investing in the companies that are driving these technological advancements. So even if your job might be at risk because of automation, you can still benefit by owning a piece of those companies that are shaping the future.
Yeah, participate in that progress.
Exactly.
Even if it feels disruptive on a personal level,
Right.
it's about recognizing that the economy is evolving,
Mm-hmm.
and those who are willing to adapt will be the ones who come out ahead.
Yeah, it's like disrupt yourself before you get disrupted.
Exactly.
Or part of that disruption in a positive way is investing in your own skills and knowledge, which Meet Kevin also emphasizes a lot.
Absolutely. Trade specialized knowledge, continuous learning. These are all ways to stay ahead of the curve.
Make yourself valuable.
Yes, in a marketplace that's constantly changing.
So even if you're not a tech investor, there are things you can do to prepare for this future where AI and robotics play a much larger role. It's about being proactive, being adaptable, and constantly learning. Now, there was one point that Meet Kevin made that kind of surprised me, and I'm curious to get your thoughts on it. He wasn't as bullish on crypto as I expected. I always thought of it as like a hedge against traditional markets, kind of like a safe haven.
Yeah, I understand why you would think that. But Meet Kevin argues that crypto, for all of its potential, is still very much tied to market sentiment and speculative activity.
Right.
And those tend to decline during a recession, which could make crypto a much riskier bet than some people realize.
So those folks hoping to escape the economic storm by jumping into the metaverse might find themselves facing a different kind of turbulence.
It's something to consider.
Yeah, for sure.
You know, crypto has been through some wild swings, and it's not always as decentralized and independent of traditional markets as people think.
So maybe not the ideal safe haven during a recession. Now, before we wrap up, I wanted to kind of pick your brain about something that wasn't explicitly covered in Meet Kevin's analysis, but it's been on my mind throughout this whole conversation. Meet Kevin talks a lot about preparing for job displacement because of AI and robotics, but what about the flip side of that? What about the potential for entirely new jobs that haven't even been invented yet because of these technologies?
That is such a good point. We often get so caught up in what might be lost that we forget to look at the incredible potential for new opportunities. Think about it. A decade ago, nobody had heard of like a social media manager or an app developer, and now those are thriving career paths.
Right, and who knows what kind of jobs will emerge in the next decade as AI and robotics continue to evolve. Maybe we'll have robot ethicists or AI creativity coaches.
The possibilities are truly endless.
So the question for the listener becomes, how can you position yourself to benefit from this shift? What skills can you develop? What knowledge can you acquire? What opportunities can you create?
That's a great question.
That is a big question to ponder. Well, I think this has been an incredible deep dive into Meet Kevin's recession-proof investment strategy. I know I've learned a ton, and I hope you have too.
Likewise.
Thank you so much for joining us. And for all of you listening out there, keep exploring, keep learning, and keep looking for those opportunities even when things seem uncertain.
The future is full of potential.
Well said. Until next time, keep diving deep.